Another pension fund worth its salt? Well, let's have a look at LNG PMC World, excluding UK, Equity Index Fund 3. You know what you really want to check? You want to check it during 2022 when the market was down. Did the fund manager deliver when you needed him the most? Now, of course, in a falling market, I expect them not to get necessarily a positive year. They were down, well, at times they were down 15%, which is somewhat worrying. Also, overall, annualized relative to the benchmark, they don't beat it. I mean, they're 0.08%. You can compound that over 1 billion years, and yes, it makes a difference. Here's another problem that I have with it. So first of all, it's given me significant losses in down years because they can't hold cash. Same old, same old. They can't even get me the 5% that holding cash would give me. If they were down 1%, 2%, 3%, I'd be happy, but 10%, that's a bit too much. Look at their top 10 holdings. This is the world, okay? Well, it's not the bloody world. They'll probably argue these companies are global. They're actually all American. And if I wanted these, which I do, then I'll put 5% in each. They've got Microsoft, Apple, Nvidia, Amazon. I won't put in Alphabet 1.3%, or Eli Lilly 1%, or Taiwan Semi 0.9. I mean, these are pathetically small amounts. Surely, if you're halfway decent, you'll have the confidence of your convictions, and you'll have a better return by concentrating in those companies. So just ticking a box and having a tiny amount in them will mean underperformance when the market rises, and because they can't hold cash, underperformance when the market falls, which is why it's basically tracking an index. It's an index hugger. Buy the index instead.